It's 9 a.m. in Shanghai, Shenzhen, and also here in Hong Kong. You're watching The China Show. I'm Stephen Engle.
I'm Haidi Stroud-Watts here in Sydney. We're counting down to the open of markets in Greater China. Our top stories this hour. SK Hynix in focus after pricing its $26 billion US share sale. Its ADR set to debut on the Nasdaq, topping Alibaba as the biggest ever foreign listing. Easing oil prices adding to risk appetite in markets. Sources telling Bloomberg that technical talks between the US and Iran are continuing despite the latest clashes. And we hear from the autonomous truck company KargoBot, one of the growing number of companies using AI to move goods across mainland China.
And Heidi, of course, it's going to be a very busy Friday. Of course, the SK Hynix story is top of the markets discussion, the biggest share sale the third largest, I should say, the largest ever U.S. first-time share sale by a foreign company. Let me get that straight. Obviously, that is dominating market attention right now. At the same time, we have attention being focused offshore here in the Asia Pacific with one of the largest typhoons we've seen in several decades heading towards Taiwan and also the eastern seaboard of mainland China.
Yeah, it's interesting, right? Because we already had in that Thursday session in Taiwan, as you know, Steve, quite a bit of a reversal when it comes to investor sentiment, that foreign dumping of Taiwan's equity holdings. So perhaps a little bit of a welcome breather as that market is suspended with the typhoon. We also see offices, schools being closed, a number of flights being cancelled going to Saturday as well. So we'll be keeping an eye on that one. But as Steve mentioned, it is all about the chip makers today. All the market action will be surrounding the likes of SK Hynix, Samsung. The Korean market is definitely getting that broader lift from these names. But as Steve mentioned, it was really about just the welcome that SK Hynix had overnight. $26.5 billion in that American depository share offering, the largest ever US first-time share sale by a foreign company. And really, we did see this company, which of course the share price traded in Seoul has been so volatile, just powering through that volatility to deliver that result, surpassing Alibaba's US debut to become the third biggest listing overall in history there. So this really gives the company quite a fundraising channel at a time where obviously it wants to fund growing spending plans, given the broader demand for AI equipment just continues to soar. We're also watching both SK Hynix and Samsung in the context of what we heard from the US Commerce Secretary, Haaland, calling on these companies to expand production in the US to address the global glut. He made these comments, I should say, at that Micron event, saying, look, Micron, obviously American producers are not necessarily going to like this with the competition, but that he's in talks with these chip giants without more specifics in terms of what a potential deal to set up could look like. We know that between Samsung and SK Hynix, they've committed, around $880 billion over the next few years on new plants. So obviously watching the chip makers in terms of how that's playing into the broader markets, as I mentioned, the Kospi is really leading the charge with this broader theme. Taiwan removing some of that volatility, given that we do see that suspension from trade. We're also, of course, still watching that geopolitical situation as well, with the picture for oil, actually a pretty steady picture for broader crude markets. It has been quite a bumpy week. The talks, we understand, between the US and Iran continuing, despite President Trump essentially saying that the interim peace agreement is over. He doesn't know if a more substantial deal will be made. And we saw 2 days of US airstrikes on Iran kind of pointing to that view. But the market at the moment seems to be viewing the latest tensions as a challenge rather than a complete existential collapse to this broader process. So we continue to watch that volatility in oil markets. And rounding out what else we're watching at the start of this hour, Steve, the yuan will be in focus, particularly as we continue to see that upside in safe haven dollar trade.
Right. So the storm that I mentioned at the top, obviously already having the impact on markets and market information. The TAIEX will be halted today, as will a lot of government services. But we're also learning now, we're expecting some of the monthly numbers from Taiwan Semiconductor, TSMC. They, in an email to Bloomberg, saying that they will postpone those monthly sales announcements till July 13th, so the beginning of next week. And that, of course, as that storm bears down on the northern tip of Taiwan. So let's pivot to our top story now, more on the SK Hynix story. Let's bring in our managing editor for Asia Equities, Lianting Tu. Let's begin right there, Lianting, about SK Hynix pulling off the largest ever U.S. first-time share sale by a foreign company, beating that Alibaba listing. What does that tell us overall here about investor appetite and continued investor appetite for the AI trade right now?
Yeah, good morning. It does show that despite the recent extreme volatility around those chip names, and despite the growing scrutiny among investors into those AI-related valuations, the demand for something that sits right in the sort of core infrastructure of AI can be enormous. That's what we're seeing in SK Hynix right now. The company sits at the very heart of the AI supply chain as a manufacturer of HBM chips, which is a critical component for AI training and running AI. And the fact that SK Hynix was able to raise more than $26 billion and price at a premium to the Korea-listed shares and drawing demand 7 times the size of the deal does show that U.S. investors, they are still very, very eager to get their hands on some of those core names. It does also show, according to some of the analysts we speak to, that the recent volatility in those AI names only shows that people are taking some profit. They are not changing their fundamental views towards those memory chip names. And increasingly, people are viewing the sector as more of a structural AI growth story rather than the typical cyclical semiconductor business. So yeah, overall, it's a pretty great showing.
Lianting, I think it's really interesting they chose not to offer a discount, right, suggesting just how much confidence there was in what they expected for the American market reception to be. Does this look like it could be the next catalyst hire for other Asian companies as well?
Yeah, it does show that, being able to list in the US can get you a bit of a premium for an Asian company. So that could possibly encourage other Asian companies to, mimic SK Hynix and go to the US for an ADR listing. Just to put things into perspective, the ADR activity from Asian companies in the US has really slowed recently because of the regulatory tensions between Beijing and the US. And with the SK Hynix deal, I think it shows that if you have a global AI growth story, if you have a globally recognized name, you can really get enormous demand from US investors. And yeah, it's a very clear appeal why a company should want to list in the US, right? U.S. has very deep pool of capital. The market overall offers better valuation, and also you can get a bigger visibility of the brand name among global investors. So yeah, I think overall people are looking at some kind of follow through, but not probably won't apply to all sorts of sectors, because right now the extreme demand or interest we're seeing among investors in the U.S. are around those AI hardware, advanced manufacturing, those kind of names. So one name that a lot of people are expecting to sort of follow through would be Samsung, although we have not yet heard from Samsung itself.
All right, Bloomberg Managing Editor for Asia Equities, Lianting Tu, thanks so much for joining us. We have some breaking news crossing the Bloomberg wire from Katayama from Japan, the GPIF. Posting a 16% annual return as the stocks, of course, have been rallying. We'll get more on that in just a bit as that story fleshes out. And later on Bloomberg Television, we are live from the NASDAQ with SK Hynix Chairman Chae Tae-won as the company makes its Wall Street debut. Join us for that conversation at the times seen on your screen.
Steve, let's get some analysis when it comes to what we're watching in the markets at the moment. Joining us from New York is Ron Temple, who's a chief market strategist at Lazard. Ron, really great to have you with us. And let's start off with the broader AI story, given the very successful debut for its ADR debut for SK Hynix overnight. So I know that you, amongst other people, are really questioning when investors are going to want to see tangible investment returns on how much has been put into companies ranging from hyperscalers to these chip producers, right? If you take a look at the exuberance that we saw with the SK Hynix debut in the US overnight, Are those questions being asked now, or are we just seeing this market being pushed higher?
You know, it's interesting. If you look back over the last 4 years, we've seen this kind of ongoing rotation, you might say. Hyperscalers, then at one point the market was in favor of the energy infrastructure that would be required to make this all happen. Then we had another shift back towards hyperscalers and now more towards semiconductors. So there have been different rotations or even a churn within the market. But I think one of the biggest concerns that's kind of lurking is trying to figure out how this all turns into returns on invested capital. And in particular here, I'm thinking of the biggest customers of the companies like SK Hynix, et cetera, in the hardware space, typically described as the hyperscalers themselves. We've got commitments in the United States of over $700 billion this year of CapEx from hyperscalers. And I guess the question from me and from many other investors increasingly is, what is the roadmap from these multi-$100 billion per year investments to some kind of ROIC or return on invested capital down the road? And I'm increasingly worried that it's going to be difficult to deliver an attractive ROIC on these investments, especially on the American side of the equation, because I do think over time, users of AI, I think enterprise users and even individuals, are going to be looking for reliable AI that's inexpensive. And in many cases, Chinese AI looks like it's better positioned to win that market share.
Does that mean you're better off looking for alpha in the Chinese AI and tech space? And are we seeing sort of everything else, Korea, Taiwan, in the US, perhaps more of a beta play?
You know, I'm not sure I'm ready to say that Chinese providers will be the best way for a shareholder to make money. And this is one of those big challenges. And maybe I should zoom back out. Make no mistake, I think AI is going to be revolutionary from an economic perspective. It will be ubiquitous, I believe, in the next 3 to 5 years. Basically, any white-collar professional will be using AI. The challenge is going to be how shareholders can make money from that, and will they get an attractive return? And the reason I stepped back is I do believe Chinese AI model producers may well end up gaining more market share. But it's also not clear if you, as a shareholder, will make money from being invested in those companies. And so, again, maybe the better place to be might be some of the hardware companies that will be participating regardless of which model provider ends up gaining the market share. It may well be that we go back to a preference for the energy infrastructure plays, the other companies that feed into the data center plays. I think that's what a lot of investors are trying to grapple with now is, A, how do you basically get paid for all of these investments? And B, what's already priced into share prices? And is there still upside if you're realistic about that monetization path?
Hey, Ron, Steve Engle here. Let me jump in. Of course, there's lots of talk, and you mentioned it to us as well, about the possible irrational exuberance, if you will, in the AI trade. But as we extrapolate it further on the stresses that are potentially facing the market, we have to look at the war in Iran and the simmering conflict that is, can bubble up at any time. What kind of dampening effect will that also have?
Yeah, I do think the last week has been a great reminder that we're far from a peaceful resolution to the Iran conflict. Lazard has a very vibrant geopolitical advisory business that is basically staffed with some pretty exceptional senior advisors and analysts. And our view for over 2 months now has been that the end outcome of the war, at least in the near term, would be a simmering conflict. And what we mean by that, by the way, is that you end up with periods of ceasefire, with negotiations, with deadlines that get extended. Periodically, you have flare-ups where there's kinetic engagement, like we've seen with the United States, over 100 strikes on Iran in the last few days. Iran having attacked multiple U.S. bases and other ships going through the Strait of Hormuz. And it's just a reminder that the Strait of Hormuz and the Persian Gulf region is less stable and less secure than many people perceived it to be before February 28th. And I do think one of the key considerations all of us should have in our mind in terms of energy security is that even after 2026, we've established somewhat of a precedent here that Iran not only has proven that it can exert control over the Strait of Hormuz, but it actually seems to have an ability to completely shut down the flow of energy through the strait. And as part of the memorandum of understanding with the United States, it does appear that the U.S., at least temporarily, agreed that Iran would have a meaningful degree of control beyond the immediate term. So I think that is a reminder that we should be placing a bit more of a premium on Brent crude and the risk to energy supplies. And that obviously has effects on the global economy and those end users of AI, whether it be consumer or corporate.
Well, then, Ron, what's your calculus say about how that will spill into FOMC policy? Higher for longer, given the inflationary risk that you talk about with the oil?
Yeah, it is interesting. If you go back to the last FOMC press conference, we got the summary of economic projections. Investors were surprised that there were basically about half of the FOMC participants had rates going up before the end of the year. Another half had rates staying constant, but it did seem more hawkish than people expected. Since that FOMC meeting, we've had Fed Chair Warsh and a couple of others say that the outlook looks a little more benign because the war seemed to be winding down. I guess when I look at it all, I think the temptation, or my bias, is that the Fed might have to raise rates. I think they're going to try desperately not to. I think there will be arguments within the FOMC, or debate, I should say, to be less confrontational. But debate within the FOMC will be how much of this is transitory. Clearly, that word really ended up basically being quite negative in hindsight after 2022. But it is easy to explain that energy prices have already come back down in the futures market. Maybe there's an enduring premium that I talked about due to the risk of the Persian Gulf. But I think at the Fed, they're going to look at this and say, okay, that's largely temporary. And what's going to become more important to the Fed is actually the immediate inflationary effect of AI. And I emphasize the words immediate and inflationary because I and many others tend to think of AI on a 5-year view as being deflationary or disinflationary, meaning in 5 to 10 years, you get higher productivity, fewer workers. But near term, we've seen these sharp increases in chip prices feeding through into consumer electronics, as you saw even last week with Apple raising prices across a range of goods. I think for the Fed, they're going to have to start grappling with that source of inflation on top of energy.
Right.
Ron, always great to chat with you. Ron Temple, Chief Market Strategist at Lazard, there with us. And we do have an interesting PBOC yuan fix at the moment, in fact, setting that fixing below 6.8 per dollar for the first time since 2023. This comes against a backdrop what has been a revival of US dollar strength as that safe haven gauge as well. We have seen a dollar gauge trading a little bit weaker going into the end of this week. Oil prices falling and that sort of having a bit of an impact, as well as some of the dollar pairs like the Kiwi seeing some strong gains. Won as well has been a big mover in the week as well. But the likes of Goldman Sachs, for one, continuing to see that likelihood of yuan outperformance, particularly against the euro. We are counting down to the open of trading in Shanghai, Shenzhen and Hong Kong. This is the China Show.
And welcome back. You're watching The China Show. Well, a U.S. official has told Bloomberg that technical talks between the U.S. and Iran are continuing, despite 2 days of clashes. Our managing editor, news desk managing editor, I should say, Jill Deeses, joins us now. So, Jill, I mean, obviously this is likely to calm some fears that we're heading back to all-out war. But again, how fragile is this truce right now?
Yeah, Stephen. So look, I think that there's a few things to really look out for here. Obviously we just had 2 days of strikes involving the U.S. and Iran. So that really just underscores, as you mentioned, the fragility at play here. I do think that when you're looking at the optimism here, it's not just about the U.S. officials' comment that those technical talks are continuing, but it's also a few other indicators that we've seen just within the last day. I would say there's not a ton of confirmed reports right now of strikes. We're in a very different position than we were 24 hours ago, 48 hours ago, when you did have those statements coming from U.S. Central Command about military strikes. Obviously things can change very rapidly. So I do want to lay that out as a point of caution. But the fact that it does seem like things have calmed down in the Middle East is something that, does present some room for again, that very cautious optimism. So that may be something that you're seeing there. And then the other thing that I would point out is that one of the reasons why negotiations were also paused was so that Iran could observe the funeral of the late former Supreme Leader Ali Khamenei, who was killed on the first day of the war. Those rites have concluded, and so that does kind of open up a pathway for ongoing negotiations. So I think that these are some things that you're looking at. Obviously, there's a lot to resolve between these two nations. You're seeing on your screen right now, U.S. Central Command making some assertions about the Strait of Hormuz. We'll have to see where we go from there.
We're in this weird space at the moment, right, Jill, where hostilities have commenced, but Trump says it's not a return to full-out war. Talks are still ongoing, but there's not a lot of hope that we're going to see meaningful progress on the big issues either. We're still seeing hostilities from some of the Iranian proxies in the meantime.
Yes, Heidi. I mean, look, I think that, the one thing that investors are likely looking for is they look for some kind of a resolution is the fact that Donald Trump and Iran really do not want a continuation. You've heard Trump talk a lot about how, he doesn't want to see a return in spiking oil prices. He's got a lot of concerns over domestic U.S. elections later this year and how that may weigh on sentiment there. So there is, I think, on both sides here, some, desire to reach a longer lasting conclusion. I think the issue really does come down to some concerns over, some of those issues that seem difficult to compromise on, including control over the Strait of Hormuz. I think that when we're looking at, sort of hostilities and what it ultimately means for the future, the one thing that we also have to look at is sort of how, whether or not there's any sort of resolution to concerns over traffic in the ability to flow through the Strait of Hormuz. Obviously, some of these recent attacks, including some strikes on tankers, have raised some serious considerations for, energy supplies and the ability to get energy flowing through Hormuz. I think that these are all things that Trump, that Iran, that all of these different stakeholders are really keeping in mind here as they continue into potential talks this weekend.
Bloomberg's Jill Desis there with the latest as we continue to watch. It has been a really bumpy end to the week for oil markets, but of course the other part of this equation is the fact that it hasn't completely collapsed into chaos either. So we are in this kind of strange holding space of limbo when it comes to geopolitics, but not such a limbo when it comes to the tech space. We are seeing the Hang Seng looking like we will see some gains going into the Friday session. Of course, it's been a big week when it comes to a lot of these tech names, particularly with the flurry of IPOs. Nexchip is the one that we're watching, set to begin trading in Hong Kong after that $890 million listing. More ahead. This is Bloomberg. Take a look at what we're watching when it comes to the imminent start of trading in Hong Kong. Nexchip, a semiconductor company, is set to begin trading on the Hong Kong market. It raised $890 million in its share sale. 216.2 million shares were sold at a 57% discount from the closing price of its Shanghai-listed stock. We're also watching Beifar as well, expected to debut on the Hong Kong Stock Exchange on Friday. This is Bloomberg.
And welcome back. You are, of course, watching the China Show here on Bloomberg. We are counting down to the open of markets, and we're looking at more debutantes on the Hong Kong Stock Exchange. We're ready to hear the gongs being banged. One company is Nexchip Semiconductor. It's a Hefei-based wafer foundry selling 216.2 million shares at $32.30. Pre-market was looking like it was going up. Haidi, as well as Beifar, organic chemical maker.
It's been an end of a frenetic week when it comes to this IPO pipeline, right? These debuts just keep coming, and a lot of them are fitting within, of course, that broader AI, chip and tech space, where we're really starting to see that revival of interest in Hong Kong and China markets. Nexchip set to begin trading today after that $890 million raise in its share sale. We are counting down now for this Hefei-based wafer foundry. That pricing, 57% discount on the closing price. Steve mentioned, we have been watching BFAR as well. That's expected to make its debut on Friday. So that's a couple that we're watching, particularly when it comes to not that many chemical IPOs that have come into Hong Kong over the last year or so. But broadly, equity fundraising has been on a boom this year. It's really been these Chinese tech companies selling shares. First-time offerings have raised to date more than $30 billion in 2026, already pretty close to that 2025 total there. But let's take a look at what else we're watching in terms of the broader markets. And of course, it is still that broader AI and chip theme, right? SK Hynix essentially carrying that strength that we're seeing, the Kospi. We are expecting to see those gains pass through when it comes to the Hong Kong market as well. This exuberance when it comes to all of these market offerings at the moment. Close to a 4-year high for how much fundraising that we're seeing at the moment. That Nexchip deal that we're watching at the moment with the festivities down at the Hong Kong Stock Exchange is among the 10 largest first-time offerings that we've seen in Hong Kong so far. So there's a lot of positivity there, and we're also watching some of the gains that we've continued to see when it comes to mainland markets there as well. The eco side, of course, we know has been a bit and we are expecting to get the second quarter GDP numbers as well after we've had, a pretty moderate picture when it comes to China inflation still. So this pretty well managed, but certainly continuation of the economic slowdown story is still in place for China. The GDP is expected to come in below target there, so leaving the PBOC in a very, very different position to some of its central bank peers around the region. We also had an interesting yuan fixing as well below that 6.8 level for the first time since 2023. This coming at a time when we've been talking about the lack of volatility in the yuan, right? It's been sitting at the lowest since 2015, but there are still some expectations that the rally will continue. We are also watching earnings for China as well. Mining will be in focus with Zijin Mining, some of the sort of mining names as well as precious metal names will be in focus as well. And of course, we are also watching some of the other names that have been front and center, Steve, in that tech trade and the debuts that were made this week, the likes of GPIF, for example, and MiniMax among them.
Yeah, that's right. I mean, we're going to talk about it as well. MiniMax looking to raise as much as 14.54 billion Hong Kong dollars in a new share sale as well as convertible bonds. GPIF soared yesterday, up 22%, $4 billion share sale at the low end of the marketed range. And Lenovo being upgraded to overweight by Morgan Stanley. Among the stocks we are watching in focus right now. Nexchip in focus as well. Obviously, as you're seeing on the stage right now at the Hong Kong Stock Exchange, it's making its trading debut here in Hong Kong after raising $890 million in a share sale. It's testing investor appetite for Chinese chip makers after a deluge of AI-related offerings. Let's get more from our China correspondent, Min Lo. Now, obviously, it's rising today. It did price it at the high end of marketed range, but at a 57% discount to the shares last traded in Shanghai. So obviously, that played into the attractability, but it also shows that the AI trade on the hardware side is still strong.
Yeah, there has been just rapacious appetite for these AI pure play names, right? That's one of the reasons why so many of these tech companies are choosing to list in Hong Kong right now to just capture the market condition. This is a company that is headquartered in Hefei in Anhui province, which, by the way, is the hometown of former Premier Li Keqiang. Yeah. And Anhui has been putting in a lot of friendly policies to try to groom its own homegrown tech hub. So this is one of the companies. It is a wafer foundry for mature chips from 150 nanometers to 40 nanometers, and they are raising funds to invest in R&D because they want to raise their capability. They want to eventually be able to make 22 nanometers chips. And yes, this is a firm that is already listed on the Shanghai Stock Exchange, but yes, just one of many companies in the pipeline that has helped to push Hong Kong share sales so far this year to close to what we are seeing in totality of 2025.
Well, one of those AI debutantes in January, along with GPIF, was MiniMax, stock code 100. But the stock has not fared that well since a peak in March. It's down about 78%. They're hitting the market again now, looking to raise about $1.9 billion with the new share sale and also some convertible bonds. Priced at a 10% discount, but what's the outlook here?
Yeah, again, this is quite interesting. Obviously, another round of share sale could dilute the value of existing shareholders, but it also tells you, right, so soon, less than a year after it listed, it's looking to raise funds again, and it echoes what Zhipu did yesterday, right, with a $4 billion share sale, also less than a year after it listed. And it tells you that many of these tech companies, they are still at the high cash burn rate phase. They are still actively investing, especially to invest in R&D, to acquire chips and secure their infrastructure, to invest in designing their own chips, and of course, to also provide a bit of cushion to cover their margins at a time when there is a price war that is pushing down those token pricing in China. So, and this is coming as mainland China has also been loosening the rules to allow less profitable firms to list on the STAR market. So reports also suggest that Zhipu and MiniMax are just two of some 10 Hong Kong listed tech firms that are also preparing to list in Shanghai as well.
Conspicuously absent were some of these big international Wall Street banking names, right, on these deals. And yet, of course, it makes sense given the political sensitivities with some of these companies.
That's right. So a lot of these big U.S. firms like Goldman Sachs, Morgan Stanley, UBS, even some of these Western banks, they tend to be very active in the deal space traditionally. But we're starting to see a shift this year. And that's because many of these IPOs in Hong Kong are largely driven by mainland Chinese companies seeking a secondary listing. And many of them are tech firms. And of course, AI has been at the frontier of the tech race between U.S. and China. Some of these companies, well, it looks like any company worth their salt these days are finding themselves on the U.S. entity list, on the Pentagon blacklist. So it's not clear whether national security is one of the factors for consideration, but it looks like these Chinese companies, many of them are now choosing Chinese banks to put together their deals. Just look at the Zhipu deal yesterday. So if you look at the top of the league table right now, out of the 5 banks are Chinese firms when it comes to the deal-making space.
Bloomberg's China correspondent Min Min, though, there with the latest. And we turn to Melbourne now, where Indian Prime Minister Narendra Modi and Anthony Albanese, the Australian Prime Minister, are currently taking a tour of the Melbourne cricket ground. Of course, cricket is the one, arguably the strongest common language between Australia and India. And we've seen this form part of the itinerary for Modi's visit. But we also saw the previous evening that Narendra Modi's Melbourne visit really blended together business, diplomacy and sport. On Thursday evening, there was what can only be described as a cultural, a diaspora extravaganza at Marvel Stadium in Melbourne, where thousands had their mobile phone lights on. Modi took to the stage, which was shrouded in purple in the middle of the stadium, along with the Prime Minister. And we have seen that lauding of closer ties. There's an aims to sign an uranium deal in terms of some of the deliverables from this visit too, Steve.
All right. Well, let's shift gears a little bit here and talk about the big storm that is approaching the eastern seaboard of China and also, of course, Taiwan more pressingly, if you will. Markets have been suspended there as Typhoon Bavi approaches. And as you can see, the impact zone and the bands there reach as far from Shanghai down to Guangdong, if not Hong Kong, as it's going to be in the next 24 or 48 hours, skirting past the northern tip of Taiwan, and then almost a direct hit to Zhejiang province and the city of Wenzhou. Our weather reporter, Mary Kuei, joins us now to talk about this. Obviously, southern and central parts of China have been faced with severe flooding already. This is one of the biggest storms in the last decade or so to potentially cause even more damage. What's the outlook right now?
Yeah, Typhoon Bavi has really just been racking up the moisture and maintaining its intensity as it's churned in the Philippine Sea over the past couple of days. And as you say, it's going to potentially drop a lot more rain on soils that are already saturated from heavy rains earlier this week from the remnants of another tropical storm. So what we're really looking at is the potential for extreme rainfall, localized, extremely heavy rainfall in some areas of eastern and then further inland and into China. And then as the typhoon dissipates and continues maintaining some of its structure and pushes inland and then up north, it will just drop more rain in a lot of these areas and potentially just cause a lot more damage through floods.
What kind of precautionary steps are the mainland authorities taking? Obviously, because it's not going to dissipate too much. It's not going over the main part of Taiwan. It's going to be sort of skirting it to the north. And again, that moisture plume is quite intense. It's going to drop significant amount of rains in addition to 200 plus kilometer per hour winds.
So authorities in Beijing, for example, have asked people to suspend outdoors activities, asked schools to do school from home, work from home, the kind of regular range of precautionary measures. Ports, I think, have suspended some operations, and airlines are, of course, keeping track of the situation and cancelling or delaying flights.
What kind of economic impact could we be looking at? Zhejiang is a big export manufacturing hub, no doubt. Wenzhou is a big trading hub, no doubt.
Yeah, I guess at this point, a lot of businesses probably are quite well prepared, hopefully, for extreme rainfall. So probably the precautionary protocols are in place. But as we're seeing with a lot of these storms, the extreme rainfall really sometimes just really knocks those records out of the park. And so something just way out of the ordinary, off to the tails, I think will be something that we may not be as prepared for as previously people would be expecting.
Taiwan hunkering down now, and then as we approach the Sunday and Monday, the coast of China. Thanks so much, Mary Hui, Bloomberg weather reporter. All right, Goldman Sachs says Chinese EV brands are moving into the top ranks of car makers globally. Analyst Tina Hou joins us next to explain why they see that momentum accelerating, even as demand at home stays, dare I say, stuck in neutral. This is Bloomberg.
China's car market continues to decline, but data this week shows a widening split between a domestic slump and a jump in exports. The Passenger Car Association says sales fell more than 23% last month. Deliveries of hybrids and electric cars that account for 60% of the market fell by a tenth.
Well, manufacturers are leaning heavily on foreign markets to offset the slowdown at home. Exports rising 80%. That was fueled by a 150% jump in EV shipments. It's a signal that demand from overseas is absorbing China's excess production. Now, Goldman Sachs says Chinese automakers are rapidly expanding their market share overseas. However, despite the strong momentum, the gains have yet to trigger aggressive price competition. Joining us now is Goldman's China auto analyst Tina Hou. So where are we in that long-time pursuit for Chinese EV makers to gain market share abroad, in Europe, in developing markets, at a time when there are walls going up because they're concerned about allegations of dumping? Are the Chinese making significant gains in places like Europe and still have pricing power?
Right. Thank you, Stephen. So as you mentioned, so far this year, we've seen acceleration, which is a surprise, actually, because it's already on top of a quite high base from last year, acceleration of exports, especially EVs. And year to date, we're seeing the China passenger vehicles having around 10% market share in the overseas ex-US market. But now if we compare to some of the other consumer products like consumer electronics, home appliance, they take around 20% market share in overseas ex-US. So we do see that EVs or auto has still quite some room to grow. And then in a lot of the different locations, Europe, Asia Pacific, Latin America, we're seeing quite strong growth pretty much all over different regions.
How important is it for them, and I think I know the answer to this, but to have some pricing power in these markets and not have that race to the bottom that they've seen in this vicious price war in China? The Europeans have talked about this minimum price guarantee so they don't go below and have a race to the bottom. But are they gaining pricing power, or are they gaining this market share and attractability, if you will, in other markets simply because they're cheaper?
Right. I think there is a misconception that the Chinese cars are just generally cheaper everywhere. But if we look at the overseas market, the Chinese cars are actually, for example, take the Brazil market where the Chinese EVs are making a very big inroad and grow very fast. The top 5 best-selling Chinese models has actually over 60% price premium over the top 5 selling non-Chinese models. So that's, I think, something that people don't really know. And based on our price tracker, for example, in a lot of the markets like UK, Thailand, the ASP is actually increasing this year instead of decreasing.
I understand there's quite a lot of high visibility, even in markets like Australia as well. We're seeing kind of local market traction being built. At what point do you see that growth opportunity plateauing, though, in the markets where there has been high retail pickup for these Chinese brands?
Right. I would say if we look at the overseas ex-China, ex-US EV penetration, last year it was at around 15%. So it's still much lower than where China is at, for example, 60% already. So we still see a lot of room for growth for the Chinese OEMs overseas. Even for some of the higher penetration markets like Western Europe, it's around like 30-something%. So still, as more and more supplies or more and more price competitive and feature competitive models come into the market, we don't see like a very near-term ceiling for the EV expansion or penetration expansion.
What is this?
How much?
If you look at the, sorry, let me just jump in here real quick.
No, Steve, go.
Obviously, there are a lot of Chinese car makers. There needs to be some sort of consolidation. Can you kind of already start to see the shakeout? Who's going to win, not only at home, BYD is the overall market leader, but abroad? Are we getting winners and losers?
Actually, for going broad, so not every domestic China OEM has what it takes to go broad in a major way, right? So definitely, obviously, there is relatively less competition in the overseas market than in domestic market. So far this year, we've already seen a few of the OEMs that have kind of come on top in the overseas retail market. And then I think in order to win in the long term, obviously localization is very important. Your localized factory manufacturing footprint, as well as localized sales network. So sales network expansion is also very important. In addition to that, after sales services is really also super important in order to build and maintain a credible brand in the overseas market.
I think that's something that's been lacking as well, after sales as well, for consumer electronics Chinese as well as EVs. Heidi has another question for you.
Yeah, I actually wanted to know how much further do we see this bifurcation, right, Steve? I think you mentioned earlier between the domestic market and what we're seeing overseas. How much longer do we have of this slowdown, or do you think perhaps we've bottomed out at this point?
Yeah, in terms of the domestic market, I think the timing for bottom out is a key focus for the investors that we have been speaking to. And last week, we actually hosted this group of management companies to discuss exactly this topic. So in terms of the domestic passenger vehicle retail sales, year to date, it's been down by over 20%, as you just mentioned. I think the consensus is around September timeframe. That will be sort of like timing for the decline to narrow. And then hopefully going into the year end, let's say December, where last year the decline has been exacerbated, so could potentially be a time of positive growth again. But for the EV side, we see the turning point could come sooner, because based on our weekly NEV order tracker, actually in both May and June, the order data has already started to turn positive growth. So which could imply that as early as July, we could start to see some positive growth for the domestic NEV space.
So let's zero in on Europe right now, because, again, they've kind of in negotiations. They're trying to articulate what kind of policies are going to be coming out. Germany has been in favor of keep on talking and not necessarily come up with complete adversarial positioning with China. But again, it begs the question, how much will a large manufacturing base like Germany that has so many people employed in the auto industry accept these Chinese cars coming into their market and threatening jobs and their market share?
Yeah, I think it's a very delicate matter. Obviously, there's already been tariff put on the Chinese BEVs and EREVs. So I think potentially they're talking about adding tariff to PHEV.
Right.
So I would say from the Chinese OEM's perspective, first of all, in terms of the potential impact on PHEV, it's actually, I would say, more controllable than what it seems. So for some of the OEMs, the PHEV sales in their European Union is only around 10% of their total sales. So I think that's relatively a small portion. Obviously, longer term, I think they understand they need to localize. If not in Germany, within the European Union, to build factories, to create jobs, to pay taxes in the local market so that they could try to balance out the economic impact.
It is quite sensitive because Hungary is one in focus as well. Yeah. Viktor Orban government very open to Chinese investment in batteries and other areas, but new government in Hungary, so things change. Tina Hou, thanks so much.
Thank you.
China Autos analyst at Goldman Sachs, they're joining us. Steve, I am watching JGB yields. 10-year bond yield falling 10 basis points to 2.775%, pushing out to the super long end 20-year bond yield. That's fallen 10 basis points as well to 3.765%. We've seen that longer end of the yield curve really being pressured, those yields falling, the yuan also strengthening after we heard from the finance minister, Katayama, saying that the government wants to encourage pension funds, including the GPIF, to increase domestic financial investment. This is Bloomberg. Let's take a look at the top story that we're watching when it comes to SK Hynix, that $26.5 billion raise in the biggest foreign debut in the US market in its ADR offering, their biggest ever US first-time share sale by a foreign company. At the same time, though, we're seeing some concerns when it comes to these single-stock ETFs with South Korea authorities. They're saying it's going to look into that impact. This is Bloomberg.
Back to the China show. Here's a look at the Hang Seng Index in the opening half hour of trade, up about 1% as we see a couple of debutantes on the market, including a Hefei-based wafer manufacturer in the chip space, continuing the trend of investor appetite into the AI trade. That is Nexchip. Another stock, though, is BFAR Group, which does chemicals for organic compounds. Not as fortunate in the opening, going down slightly. We're also seeing some headlines cross on the Korea leveraged ETF market, where authorities and regulators are saying that they're going to look into that as there's been concern about a disproportionate amount of investor appetite for these single company leveraged stocks like Samsung and others in the Korea market right now. So we'll have to keep an eye on that.
Yeah, possibly a bit of an understatement, right? Because we had a story out yesterday, which was just pretty extraordinary, that by one gauge, they now make up more than 70% of trading value of the overall $4.3 trillion market in South Korea. This is the further over leveraged ETFs, along with the two chipmaker stocks that they track. So it will be interesting to see what that regulatory reaction to that is, because we can kind of see the impact. The question is what they're going to do about it. But in terms of these two single stocks that we're talking about, of course, that's SK Hynix and Samsung. Both of them are moving on this broader story that we heard from the US Commerce Secretary, saying that he wants both of these companies to invest in terms of producing chips in the US. And it was interesting because he made these comments at a Micron conference, actually. But SK Hynix is really in focus because, of course, we did have really an extraordinary showing for its American, the ADR debut there, $26.5 billion raise, biggest foreign debut in the US, and really really powering through what has been quite a bit of domestic stock volatility for its stock price to really make this a new powerful fundraising channel for SK Hynix as well. The choice, interestingly, not to give that discount probably speaks to some of the confidence that it had in the reception being very strong, which it was. So watching some of the other chip makers as well, and we are also getting to the tail end of what has been a frenetic week for trading and debuts in Hong Kong. Nexchip Semiconductor is one of the latest after that $890 million listing, so we're watching that. At the moment, US futures a little bit on the back foot. NASDAQ futures also softer there as well. The Kospi broadly being lifted by SK Hynix and trading in Samsung as well. We're also seeing Japanese stocks there up by 2%. And also, we are in fact still watching the developments when it comes to the US and Iran, although something of a recovery is taking place when it comes to oil prices. In this space at the moment where we don't have a full-scale resumption of the war, we don't really have a great deal of hope for these talks to produce anything substantial either, but we do understand that the US and Iran, those technical talks are still continuing despite 2 days of those airstrikes between the US and Iran earlier this week. Watching that 10-year yield, though, as well as the 20-year yield. And for that, I'll bring Garfield Reynolds, who leads our Markets Live Asia coverage, joining us now. Is this the GPIF part of the story? What's going on with JGBs this morning?
Yeah, well, I mean, JGBs were looking pretty solid initially, and they looked to gain some encouragement from some commentary out of the finance minister that was perhaps taken as signalling that they were more willing than some had thought to let the BOJ craft its own path, but then along came the GPIF comments, and that really got traders excited. The prospect, one of the big concerns for JGBs always is who's going to buy, because of these concerns about still high inflation, about BOJ caution, about government issuance. So you need those marginal buyers to be there. And GPIF would be very much the marginal buyer of choice. So the idea that they're going to come in and that they would be a solid, constant presence, that has led to a huge turnaround for JGBs. Now, they were pretty ripe for a turnaround because the yields had gotten very high, and you had a decent lead overnight from US Treasury yields, which edged down as you mentioned. The oil situation was becoming less concerning. So you add all that up, they were ready to rally, and bringing in GPIF as a possibility, that's really led to a remarkably strong gain, and shows just how desperate the market is to see a steady presence on the buy side.
It's been an interesting morning when it comes to some of these currency pairs against the dollar as well, right? Jawboning from South Korean authorities, and also the PBOC seems comfortable with some of the strength in the yuan if you look at the fixing today. Yeah,
well, I think governments across Asia are taking advantage, as it were, of the dollar's loss of momentum with oil coming off, with the geopolitical tensions coming off, and so that's pushing. Until we had those geopolitical tensions, we were seeing bets on Fed rate hikes bleed lower. So there's the potential for that to happen again. The dollar was already looking vulnerable, and then Japan actually also went to jawbone the yen. Then the PBOC really hit it where it hurts, which actually set off the Aussie and New Zealand dollars, helped to send them higher. Then you get Korea coming to the party. So I think that highlights that a risk for the dollar, at least across Asia and potentially elsewhere, is that the levels it had reached in recent weeks were causing concern globally because of what that does to economies around the globe. The dollar had got strong enough that it was causing a tightening effect for monetary policy settings. So the timing has turned out to be right for Asia to kick back a bit and to relieve some of that pressure that the dollar was creating.
Gafun Reynolds there, who leads our MLive Asia coverage, marking some of the market moves that we're seeing. And in the equity space, of course, it's about SK Hynix raising the $26.5 billion in its ADR offering in the US, the chipmaker powering past these bouts of volatility that we've seen domestically to deliver the largest ever US first-time share sale by a foreign company. Our Seoul Bureau Editor, I should say, Danny Thomas, joins us now. And Danny, we're also looking at the intention of South Korean regulators to look into these single stock leveraged ETFs, right? We had a great story out yesterday saying if you look at Hynix, Samsung and these ETFs that track these stocks, it makes up more than 70% of the market. So how much further are we talking about here, particularly given we had the very, very hot reception for SK Hynix in the US overnight?
Yeah, that is an extraordinary number, right? Almost 70% concentrated in these ETFs plus the stock. So the government and the authorities have been pretty concerned about it. And you could see how the leverage, the retail people coming into the market has even made it even more scary for the government. So there is a bit of a action that is planned. We exactly don't know how much they will go in, but clearly the volatility that you've seen in these stocks, the two stocks, has caused the government and the authorities to take notice. And to what extent they go in reversing these momentum of these kind of ETFs is a question mark. But clearly action is warranted, and I think they'll come after these kind of rules or kind of guidelines sooner, is the kind of expectation.
Hey, Danny, obviously this does indicate good institutional investor demand in the United States for the continuing AI trade. I think this was about a 3% premium to the equivalent shares in Seoul. I mean, the obvious question, too, is how much further is needed to invest in building out SK Hynix's capabilities in manufacturing, given the overall, global demand for high bandwidth memory?
Yeah, look, so I think the demand, as SK and other chip makers have said, the demand is going to be pretty strong even up until 2030. So the rollout of the new expansions is going to be gradual. And what these companies have shown quarter after quarter is that the profits coming in is pretty extraordinary. Samsung this week showed that their quarterly profits were about 19-fold higher than last year and even 50% higher than the previous quarter. So profit is coming in, money is coming in, and this is the time to kind of, bring in those expansion plans that were on hold for some time. And this huge $26 billion that they've raised will be used towards that expansion plan. In terms of the book itself, we reported, Bloomberg reported that the overall demand was exceeding 200 billion, which is again a sign how investors still believe in these AI trades have momentum. And tomorrow, when the listing happens, right, we will have a clear sign. But their ability to price this 3% premium even to the local shares during these volatile times is again shows that investors believe in these names for some more time to fly.
In terms of what regulators might do when it comes to the concentration into these two names, a concentration in these ETFs, it's only a problem now that we start to see more volatility swings in this AI story, right? So is this about protecting the sort of retail cohort? Do they want to reduce the amount of retail participation in this space?
Yes, definitely. I think that's one of the prime concern here, that the too much of retail participation and that's completely taken over the whole space. And one of the regulators actually, openly, publicly kind of acknowledged that it was kind of their mistake to have let it go or let approve these deals. So I think they have, what exactly they do is not very clear, but they will definitely make sure that retail investors don't get carried away by these momentum trades and they have a better control on these products.
Bloomberg Seoul Bureau Editor Danny Thomas there with us on really, Steve, just the story of the day, the week, the year, possibly the decade as well. But certainly we're watching for that further volatility in these leveraged ETFs, and potentially regulators now really getting concerned about these swings and how they're just causing enormous bouts of volatility for a huge amount of retail participation in the South Korean market, over 70% by our calculations of the broader market being comprised of by these vehicles and these these two particular companies. Later on Bloomberg Television, we'll be live from the Nasdaq with the SK Hynix chairman, Taiwan, as the company makes its Wall Street debut. Join us for that conversation at the times on your screen.
But up next, as the competition heats up around autonomous driving technology, we speak exclusively to the CEO of KargoBot about their fundraising and expansion plans. This is Bloomberg. And welcome back. You are, of course, watching the China Show here on Bloomberg. Well, we're going to turn our focus now to self-driving technology and Chinese firm KargoBot. It's a spin-off from Didi that operates in more than 10 mainland provinces with 200-plus patents in the technology. Let's get more on the industry and the company's expansion and fundraising plans. Joining us exclusively now is the CEO, Junqing Wei. Thanks so much, Junqing, for joining us here. So give us an update. Give us a quick elevator pitch about your business. There is competition in this space, no doubt, in autonomous driving. This had some hiccups and some regulatory oversight, obviously, and a lot of different companies are in that place. But I know about Inceptio and the trucking, long-distance trucking, that has some autonomous and ADAS features. What about you guys? Where are you right now in the evolutionary chain of long-distance trucking?
Okay, good morning, everyone. Thanks for the invitation. And my name is Junqing Wei. I'm CEO of founder of KargoBot. So I want to first talk about the name of the company. You know, KargoBot is cargo means freight, and bot is robot, right? So the vision and the goal for the company is to revolute logistics with robotics technology. And currently, we are operating the world's largest autonomous driving truck fleet with 400 trucks. And actually, there's one major milestone, I think, is the new start of a new era is by the end of 2025, and some of the fleet, we achieved fully driverless. So on public road, in Inner Mongolia or other provinces in China, you can see those trucks driving actually on the road without a driver, and they can achieve profitable. So that's a very new start for the whole industry, I would say.
I mean, you're talking about level 4, so full autonomy. There's been some regulatory issues, though, with some outages, some accidents, and the like. And the government obviously has taken a step back in some of these sandboxes for full autonomy. But you're saying in select places, you're already full autonomous.
Yeah, that's a very good point. And actually, the selection of a scenario is very important for companies like us. So at the beginning, we select bulk commodity as our entry for this market. Two reasons. One is definitely transportation is one of the largest commercial market for physical AI. It's $1 trillion market. And at the same time, you need to achieve safe and efficient driving, right? That's why we choose some suburban, rural area, north part of China as the entry point. And also we introduced the world's first, we call it platooning solution, which means the first truck, they have a human driver, we call it pilot driver, and it's leading multiple driverless trucks. And by combining these together, you know, we already validated that the AI is 5 times safer than a human driver, especially for the very rural area. It's very difficult. It's a huge driver shortage there, and we just fill the gap, and that's why we can expand relatively fast.
How quickly are you seeing customer uptake of your services, and how does that reflect into your financials, whether revenue year over year and eventual profitability? When is that target?
Yeah. So over the last 3 years, our revenue grow like 100% year over year. But that's before profitability, right? So whenever a route becomes profitable for a customer, they will just replace all of their existing equipments with this new product. And the first product we're providing is this platoon we talk about. And we are also developing our next generation of product is actually a platform, a tractor or a truck without a cabin, because we are achieving like 1,000 trucks by the end of the year. All of them will become relatively driverless, and then you don't need actually a space for the driver, and the next generation of product can become more profitable for our customers, and they will be adopting them very, very fast.
Can you tell us about some of the contracts and partnerships that you're looking at the moment? Are they, freight carriers, for example, or are they vehicle manufacturers? Where's the strategy of that heading?
Yes, we are a 2B business. So actually, we are actually serving our customers. Majority of them are factories, like power plants, coal mines, stone mines, in the steel industry. So basically they have hundreds of thousands of tons of products they need to deliver on a daily basis. And most of the OEMs, car companies, we see them as our partners. So we work with 6 of the 10 leading heavy truck OEMs in China, and we definitely are very honored to be invested by some of the leading companies in the ecosystem as well.
What about international expansion? Which markets outside of China are you prioritizing, and how much progress is being made?
Yeah, so I want to say that Chinese logistics or level 4 logistics market is one of the most fastest growing markets globally. Definitely, we spent the last 4 years focusing on China, on actually polishing this technology and evolving that. And we do have our global expansion plan that we are already looking into the Middle East, and we are looking into Australia, Brazil, and those markets that share the same characteristic. The land, there's kind of rural land in the middle of the desert, but very high demand from factories to deliver goods. Yeah, so we're looking into those markets as well.
Do you have a particular market in the Middle East that you're ready to announce, or will be soon announcing?
Yeah, we'll be soon announcing that. We have we are forming a deep partnership with the leading logistic company in the Middle East. Yeah.
Well, you've been spun off from Didi, the big ride-hailing company in China, about 3 years ago. How much of a backer are they still? And also, what kind of fundraising do you need? And potentially, the market here in Hong Kong has been booming with different AI-related companies, including Momentum recently in the autonomous driving space. So, what are your IPO plans and what are your fundraising plans?
Yeah, so Didi is really, supporting us a lot on the scenario-wise because, autonomous driving you need a lot of data accumulation. Yeah. And Didi's robotaxi has been operating in city environments with lots of pedestrians, with bicyclists, motorcyclists, and all those data is helping us. It's helping us to involve our AI technology. And on the fundraising-wise, we already finished 3 rounds of funding. The last round was Series B. In March this year, and we are targeting to raise. As you mentioned, the market is growing, is looking pretty good. So yeah, we got sufficient funding for us to scale our autonomous robot and also to help us developing the AI technology.
Yeah. Do you have any kind of timeline when you might want to go to the public markets, IPO?
Yeah, we're looking. We are really working hard on that. Yes, I would say.
Within 5 years, I would assume.
For KargoBot, so our first value is to create value for a customer. So as long as we have sufficient support from a customer and the fleet become profitable, I believe that the market will see that and will get sufficient support either from a private PE or from a IPO, as you mentioned.
When's profitability? Or break even, then profitability?
Oh, sure, yeah. So I think in the next 2 years, 2.5 years, the company we are looking into making profit. But as of today, in certain routes, the driverless routes we are operating with around 100 vehicles, fully driverless on certain routes, we still achieve the world's first profitable routes globally. So that's we are pretty proud of that.
What's still missing in your offerings, and what do you need to spend on? I mean, the price of compute is going up by the day, and data storage and the like, and chips.
Yeah, I think that's only for a short period of time. If you look at 5 to 10 years, they won't be expensive. Actually, the price for the autonomous driving, I would say, hardware has decreased dramatically. Like 5 years ago, you are looking at maybe $500,000 if you want to put a car into autonomous. But we have already decreased that for the heavy-duty truck. If you want to make a driverless truck, the total price as of today is around $15,000. So it's already decreased dramatically. And we are saving around maybe, I would say like, $200,000, $20,000 of like actually the labor cost for our customer.
Yeah, because no driver, and then you're going to take the cab off it as well. So you can have rolling pallets across the supply chain in China.
Yeah, exactly. Yeah.
All right, Junqing Wei, CEO at KargoBot, with outlook for their autonomous trucking company. You can rewatch that interview and our entire show, of course, if you will like, on the Bloomberg Video Hub. Subscribers can explore live streaming and our news and interviews there. Check it out at Bloomberg.com/videos. This is Bloomberg.
Take a look at what we're watching as we head into this final day of trading here in Asia, and it has just been a pretty frenetic week, right? So dominated by these tech giants. SK Hynix is front and center at the moment, really lifting the broader market. We're seeing that rise when it comes to its Seoul traded shares after raising $26.5 billion in its ADR offering as well. We are seeing a little bit of downside when it comes to the Nasdaq 100 futures there, as well as US futures more broadly, signaling perhaps a little bit more of a cautious tone there. We're also watching 7 & I Holdings there in terms of the Japan session, down by 1.5%. Guidance being seen boosted by short-term gains there, but some of the concerns in terms of the ability to see improved, sustained business in its core business are clearly dragging on sentiment today, lifting the full-year operating profit guidance by about 5%, sales forecast by nearly 10%, but that concern that it is temporary is weighing on investors' moods today. This is Bloomberg. It is 11:29 a.m. in Tokyo. Japanese markets are headed on break in a minute. It has been a pretty exciting session in Tokyo so far, really led by these comments from the Finance Minister Katayama calling on pension funds to invest in domestic assets, including bonds. We've seen the move in JGBs and the yen as well, saying that the government intends to pursue policies to support households and pension funds, including the GPIF, to increase their investment in domestic financial assets. Let's get more when it comes to this push to have pension funds and others invest more within Japan. Our senior editor Brian Fowler is in Tokyo. We've got a great piece reacting to this on our MLive blog, saying that this sort of government-driven repatriation from the GPIF could trigger a big institutional reaction, right? What do we make of this, and does it come as any sort of surprise?
Morning, Heidi. I think it's important to point out the context for these comments. So it's not the case that Katayama came out with this new initiative that she was wanting to announce. It's the fact that she was actually asked by a reporter how Takaichi's growth strategy, which aims to channel public and private investment into 17 key sectors over the next 14 years, she was asked how that strategy would actually benefit ordinary people. And in response to that question, she said, well, for one thing, we hope to have the pension funds invest more of their assets in domestic assets so they can benefit from the gains of that other investment. So I just want to make it clear this isn't some new public policy stance from the government. On the other hand, it also comes against the backdrop of Japan having inflation 2% or so on average over the last 2 years, and positive interest rates for the first time in a long time. So there is a recognition on the part of Japan's government that citizens really need to put money into financial assets, if they want to stay ahead of inflation.
Hey, Brian, Steve here. What does this ultimately mean for the yen? Obviously, the yen had been weakening well past 162. It's gained a bit on this news. If it's going to be encouraging some inflows and in domestic, inflows, if you will. What do currency traders say about the impact on stemming that continued weakness in the yen?
Yeah, Steve, so we saw all Japanese assets gain across the board this morning. The yen notably strengthened below that 162 threshold against the dollar. bonds also rose. It definitely bodes well for Japanese assets if pension funds heed this call from Katayama to channel more of their money into domestic assets. GPIF, she specifically mentioned that, and that, of course, is right up there with Norway's sovereign wealth fund as one of the world's biggest pension funds with $1.8 trillion in assets last time they disclosed that at the end of March. So that's a lot of money at stake. About half of the GPIF's assets as of the end of March were invested in overseas assets. So, even a small portion of that assets, if it were to come back to domestic funds, domestic channels, it would have a big impact on the yen and as well as bonds.
All right, Brian. Bloomberg senior editor Brian Fowler in Tokyo, keeping us up to date on that latest story. Now to some of the other big corporate stories we are following. S&P Global has downgraded Oracle's rating to BBB-, one level above junk, citing the company's growing spending on AI. The agency says Oracle's rapidly expanding infrastructure business is increasing its overall credit risk. It expects Oracle to burn through $42 billion of cash in fiscal 2027, up from its prior forecast of $24 billion. U.S. Commerce Secretary Howard Lutnick has called on Samsung and SK Hynix to expand chip production in the U.S. Speaking at an event hosted by Micron Technology, Lutnick confirmed he's in talks with the South Korean memory chip producers, but didn't offer specifics. His comments come a day before SK Hynix ADRs make their trading debut in New York. And South Korea is looking to turn its AI boom into broader economic gains. The government plans to use tax windfalls to invest in emerging sectors and support young people as policymakers grapple with concerns over job losses and widening inequality driven by AI. Well, Seoul Bureau Chief Kat Barton joins us now with more. Kat, fill us in. How realistic is this? I mean, I know governments around the world look at avenues for tax revenue when things are booming. Does this get to trickle down to the average citizen?
That's certainly a very big concern in South Korea at the moment. They're looking at huge windfall taxes or excess tax revenue from SK and Samsung. It could be as much as more than $60 billion US dollars that they're looking at getting for the 2026 tax year. So they're already having big conversations at the very top of government about how they can use that money and not squander it. And the big priority that we heard yesterday from South Korea's labor minister, who gave Bloomberg an exclusive interview, is that they're eager to invest that in young people. So young South Koreans have been struggling. There's 1.7 million people in their 20s and 30s who aren't in work at the moment. And they're already starting to ask, could we use this windfall from these, the AI earnings, these excess tax revenues, to help those young people and make sure that all South Koreans feel included in this AI-driven growth boom?
Youth is obviously a big part of that in terms of having the outsized impact of advancing tech on productivity and the labour market, right? But is there just growing discontent more generally in terms of the bifurcation of the fortunes of, if you work for SK Hynix or Samsung, for example, versus the rest of the economy?
There is. It's a tricky one because also we've seen that Samsung and SK have kind of upended what used to be the traditional hierarchy in South Korea, where everyone wanted to be a doctor, wanted to be a lawyer. Now everyone wants to be a semiconductor engineer, especially after the news broke last month about how huge these bonuses will be, because we're talking about potentially like $400,000 US dollars as a bonus for a semiconductor engineer at Samsung. So these jobs have become a lot more desirable. I think there is growing resentment. It's hard, obviously, if you're a civil servant, if you're a train driver, to see people who maybe you went to school with in line for such enormous life-changing payouts, especially when in Seoul specifically, you've got a very hot housing market and a lot of people already feel priced out of buying their own apartment, priced out of starting a home, starting a family. So I think the government is really trying to find steps to address that, to keep social cohesion going. And this is, it's a slightly left of centre government. The Labour minister emphasised to us yesterday they're not talking about socialist redistribution, but they're saying that this is potentially a way to, it's future-proofing the economy, right? They want everyone to feel included. They don't want to create, people who feel that they have missed out. So they want to take proactive steps now to address that.
Bloomberg's Seoul Bureau Chief Kat Barton there with that story. And more young people are investing than ever before, embracing sophisticated and sometimes unconventional trading techniques that would have been unheard of for earlier generations. Bloomberg Originals has been taking a look at what's driving Gen Z to make these bold, high-risk investment decisions.
There are many types of risk, and now even trading is an extreme sport.
In this video, I will start with risking only $100 per trade.
Bro, it's simple. If you can scroll TikTok, you can trade.
You have the fear of missing out on a trade.
And judging by social media, everyone is getting rich.
We're at $232,000.
Just today, I made $16,000.
More young people are investing than ever before, and they're learning about markets in a way no generation has.
Gen Z really is distinct from other age groups. If you go on social media now, you will see a lot of sophisticated trading techniques used in ways that I think no one would have imagined a 20-year-old in 1990, 2000, or even 2010 doing or even knowing about.
I want to show you this trade I'm taking.
A lot of that activity has also broadened to sports gambling, for instance, or trading on prediction markets.
But there are worries that these investors are over-leveraged, taking one too many risks.
I've always been a big risk taker. It's kind of just part of who I am.
3, 2, 1, to the moon! Holy Well, you know what?
Gen Z has a highly differentiated view of risk.
They don't drive, they don't date, they don't drink. On the other hand, they're also this extremely risk-taking generation.
And for many, it's the only path they see to getting ahead.
YOLO stands for you only live once. So YOLO bets would refer to risky investments where the trader has an attitude of, you go big or you go home.
And subscribers can watch that documentary in full right now and on the terminal, also on Bloomberg.com. It'll be up on the Bloomberg Originals YouTube channel too a little bit later on. This is Bloomberg. Take a look at MiniMax with the group agreeing to place 35.6 million shares at $268 Hong Kong a piece, raising about 9.5 billion Hong Kong dollars there. Discount of about 9.9% to that last close of Hong Kong, $297.40, Steve.
Well, as Beijing ramps up its focus on tech self-reliance, the spotlight is growing on China's homegrown chip makers. Companies like CXMT are set to shake up the global memory chip market and boost Beijing's AI ambitions. Now, CXMT, or Changxin Memory Technology, is launching the country's, that's China's, biggest IPO this year, seeking some $4.3 billion US dollars. It also aims to double output this year and boost its supply chain. The company is in the focus of our big take today. And for more on this somewhat secretive company, technology reporter Gao Yuan joins us now from Singapore. So I guess the big overarching question is, how much of a threat is CXMT to the big boys like Samsung, like Micron, like SK Hynix in the memory chip business, especially when HBM, high bandwidth memory, is so in high demand right now?
Yeah, that's the focus of it. For now, CXMT does not have, sizable production for HBMs, but in the long run, and in our report, we said basically they are planning to do so with help of some other companies that is not being disclosed as CXMT subsidiary, but they're helping with CXMT to do from chip design to chip manufacturing to packaging and testing, so that someday, hopefully very soon, that it will becoming a contender that challenges Samsung and HK Hynix.
We've seen this flurry of fundraising, right, taking place when it comes to Hong Kong in particular, and now we're looking at this trend in China as well. How much depth is there in this market, and how much enthusiasm is there for this particular type of company?
They will be starting the stocks subscription next week. I think it will be very popular, at least from I heard from people around me. People are very excited about this upcoming IPO. I guess the question is how much it will impact the overall market when when the entire market was trying to get absorbed of this $4.3 billion IPO, when the rest of the market is not doing so well in terms of comparing to a U.S. market where the tech stocks have been jumping, and in China and Hong Kong, it's another story for tech company stocks. So basically, SexMT is something that will help Chinese technologies companies to validate its position as a key player in this AI build out in China, especially.
How much does state support actually build and boost its case to investors? Because, again, we all know at the highest levels of the Chinese government, it's about self-sufficiency and indigenous innovation. Is this kind of that crown jewel in the memory space?
Yes, it's beginning from it starts from the very beginning of SexTEM's creation, when the local Hefei government in Anhui was very supportive of this project, giving land and everything, other kind of supports to get the business started. And 10 years later, it is becoming the China's best shots, I should say, in HBMs and potentially other sectors as well. For now, it does the RAMs, and HBM is something that it will do in the future. So basically, the government support is always been there. And if you look at the entire Chinese AI infrastructure build out and model build out, there are so many players in this area. You're talking about Huawei, Alibaba, Tencent, ByteDance. But in memory chip making, especially HBMs that is powering basically entire AI compute build out, SexMT is the only viable player in this industry for China. So that's why the company is so critical for the entire project to win.
Bloomberg technology reporter Gao Yan there in Singapore. You can check out Gao's piece on the terminal now if you're a subscriber. The function is NI Big Take. You can also read that on the website at bloomberg.com. Well, AI, of course, fast becoming a new measure of global power built on chips, infrastructure and scale. In the first episode of Bloomberg's new monthly podcast series, Emerging, Menaka Doshi explores India's dilemma of trying to achieve AI sovereignty without owning the most advanced layers of the technology stack. Here's a preview.
The US is known for still maintaining a lead in frontier models. China, I believe, is the highest AI publication rate, highest patent output in China. South Korea has, I believe, the highest innovation density in terms of patents per capita. In the next 3 to 5 years, will India join that rarefied group? And if yes, for what accomplishment?
What I would like India to do is also have frontier status in terms of having frontier models, as well as having papers and patents, which, we already have the third largest number of papers, research papers published. Yes, quality of papers may be a different question altogether, but the number of high quality papers is also increasing at a very rapid pace. India has amazing talent. Once it's unleashed, I think you'll see progress. So whether it's papers, whether it's models, applications, all these metrics, India could be a leading player in the world.
Srikanth, why are you wishing a frontier model for India?
I think India needs a frontier model because just think about
why.
From a sovereignty standpoint, we discussed that having a frontier model is crucial to that, not because we don't want to use other people's models, but we also need some models that have are working on some of the most critical security sensitive areas like defense and other areas. So it's super important that India has that, because even if you look at the latest models like Mythos and Fable 5, why do we think they are a threat? Because they have the ability to persist and find multiple ways and get to the outcome and work for 10, 15 hours at a stretch without making a mistake. That is their power, right? If that can be done, it means that India's security systems can be under attack. So we need sovereignty from an AI standpoint. So these models have to be built.
And the frontier model capability will also extend to small models, by the way. I mean, it's a capability.
Sure. I just felt like it brought us full circle in the discussion around sovereignty.
And I would like to just add one more point, right? I mean, when I say adoption can be our big USP, it needs to translate into products. We cannot be doing body shopping in the name of adoption, right? Adoption should let startups build deep tech products, platforms. It should be platforms that lead to adoption.
And the first episode of Emerging is available now across platforms including YouTube, Apple, and Spotify. Coming up on Insight with Haslinda Amin, we speak exclusively to the TCS CEO after a 5% quarterly profit rise, with cost-cutting measures helped it weather AI headwinds.
Well, tournament favourites France are one step closer to a third FIFA Men's World Cup title, booking a semi-final spot with a comfortable 2-0 win over Morocco. Superstars Kylian Mbappe and Ousmane Dembele scored in the second half after Mbappe had a first-half penalty shot saved. The French now take on either Spain or Belgium, who will be facing off in a second quarter-final tomorrow, Steve.
And the third quarterfinal will see Norway clash with England. What a match. But it won't be just the Norwegians cheering them on, because star striker Erling Haaland has become somewhat of a Chinese internet darling. Of course, China's not in the World Cup, and it helps when Norway beats Brazil. But, you know, our China correspondent Min Min Lo has the lowdown on this, been looking into it. Min Min, he's 6'5" striker. He has a unique look, no doubt. Some people in China call him ugly, but good looking, and good looking but ugly. But what is the basis of this sensation in China?
I have to confess, Steve, I'm not a football fan, and I spent a lot of time pouring through social media, and I don't fully understand the Chinese obsession with this man. But yes, he is absolutely seen as one of the best footballers of our time right now. He's broken records in terms of the most number of goals scored in the fewest number of matches. So absolutely beating everybody, helping Norland, in fact, to end this 28-year streak of being absent from the World Cup. So Chinese fans have been giving him a lot of different monikers, from goal machine or goal robot, because he seems to be programmed to score, to Ha-bao, which is a Chinese term. It translates to baby Ha or little Ha. It's not a derogatory term. It's a term of endearment that people give to people they adore. And, you know, here he is. He's made himself a Chinese official social media account on both Weibo and Douyin, a very strategic move, because he then accumulated tens of millions of fans within days. And here you can see him posting videos of himself speaking in Chinese, talking about Chinese food, and even participating in some of these viral trends in Chongqing, for example. If you can show that he was swallowing this train in Chongqing, that's something that many people do when they travel to Chongqing. And of course, the Chinese people are falling in love with him. And also look at his iconic man bun there with his blonde hair. And he uses a particular brand of hairband. And guess what? On Taobao, that hairband is now being sold everywhere.
So, I mean, the big brands must be lining up to get in on this action. I'm never doing a man bun, for one. But obviously, who's courting him?
Well, there's been one very iconic advertisement with a Chinese herbal tea brand. You might know this, Steve, as Wang Lao Ji. The international name for it is Walovi. So they have made an advertisement with him with a very, well, to me, it's a ridiculous sounding music, but it's very catchy and it gets stuck in your mind. And our producer sitting next to me has been humming it all day and annoying me all day. So this is the one. There's a funny story about it, because Haaland was caught going to the opposing goalie's side and drinking a bottle the opposing goalie's water. He did that twice, and so perhaps it's fitting that he is advertising with a beverage brand here. And there's another advertisement with him with Midea, the home appliance firm as well. So showing him really lifting some of these big, heavy appliances. If you need a big man to help you do that.
Folks, data correspondent Min Lo there with the netizens' latest obsession, globally too. Taking a look at these markets as we head out for this hour, but Tencent in focus in talks to become the largest shareholder of Manus.